to today's session. So today we are going to continue our chapter number 6. Till last session, whatever we have done, we'll do a quick revision. Okay. So what we have done is we started with SA 560, that is the subsequent events, where we discussed like what is the subsequent event, like which there are certain buckets of the events that it may happen till the date of audit report, till the issuance of financial statement, beyond that. But to understand that what is required to be done for those, we need to understand what is a subsequent event. Okay, so we discussed in a timeline way, okay, what is the subsequent event? That events happening from the close of financial year to the date of audit report, and from the date of audit report to the date of financial statement issuance, and beyond that there are two categories, totally three categories. And what we are required to do for those three categories, we understood that. Like for the first category, we have to design and perform audit procedures to obtain sufficient and appropriate audit evidence, like to understand whether the appropriate effect of those events which are existing events which have happened after the close of financial year but before the date of audit report, have been those adjustment have been given or not. Second, that we need to respond appropriately to the events that are after the date of audit report. Now it can be till the date of issuance of financial statement or beyond that. Just we need to understand what is the event, how it is impacting, and on the basis of that we need to respond appropriately to those events. And we discuss what we meant by respond appropriately. Then we shifted and we discussed about in detail with the SA 570, that is a going concern. We discussed a lot of terms in SA 570. For example, assessment of an entity's ability to continue as a going concern, that is a going concern assessment. Then whether the conditions or events that are pointing towards or creating doubt in the auditor's view about entity's ability to continue as a going concern, we call it as a material uncertainty existing about the entity's ability to continue as a going concern, another key term. We understood what is the responsibility of the auditor. We discussed about it does not mean that events and conditions are there, that means a material uncertainty is there. And we also discussed that material uncertainty is not equal to that going concern basis of accounting should not be used. So all three are different. Like first comes events and conditions that cast significant doubt on entity's ability to continue as a going concern. Then when you have multiple of such events or events which are of material in nature, then it gives rise to the material uncertainty. If material uncertainty not responded appropriately, not handled appropriately by management, or management is not ready to do anything, it may then turn that okay, going concern of basis of accounting is not appropriate. It is one step by another step. It's not all three are equal. Okay. And then we understood the audit procedures that we are required to perform, what we are required to check, and on the basis of that, what we have to conclude, whether management has disclosed this or not. Disclosure and opinion. If disclosure is not appropriate, we may choose to modify our opinion. If the going concern basis of accounting is appropriate and management still has used, then there is no other option to issue other than to issue a adverse opinion. So that we discussed till now in chapter number 6. Okay. Any doubts? No? Okay.
कोई doubt नहीं है.
No issues. Okay. So let's then proceed forward. Okay. Now what we are going to do today basically is there is one more essay that is pending, essay 580. We are going to cover that, and after that there are many questions that we have to cover based on whatever we have did in combination of chapter number 5 and chapter number 6. Okay, so we have a very good questions that we will be covering today based on 5 and 6 both. Vishal, can you explain like what is fresh start from today? Like something, what you meant by that? Okay. So uh, let's go to first understand from the study material that how your essay 580 is given. Okay. Let's understand that from the study material. Okay. Now you have to come on the page number 6.8 of your study material. Okay. Over there, essay 580 has been given. Now, what is essay 580? Essay 580 basically deals with the requirement of written representations that the auditor is required to obtain from time to time from the management, okay, or from those charged with governance. We have seen this requirement in multiple standards that, okay, as an auditor, we need to obtain written representations. As an auditor, we need to obtain written representations. But there are certain things, there are certain requirements that we have to take care when we are obtaining the written representations. And that is something, is discussed by SFIAT. That what are those things that you, as an auditor, when you become an auditor, that what are those things that you need to take care when you are obtaining a written representation? And what are the things that you need to understand about the written representations? Okay. Now, at multiple stages that we obtain written representation, but first, to understand that what the requirements of written representations, we need to understand what is a written representation in detail, that what it constitutes, why we call a written representation, what is the purpose of these representations. Okay. So anyone out of you, if you can tell me what is a written representation? Anyone?
Sir, written representation is like a confirmation from the management that whatever they are provided is correct.
Okay, good. Yes. Anyone else would like to add further to this? Okay. When I call written representation, it is given for a purpose. Okay. That we need to understand that the purpose behind it. So, written representation is a statement that management gives to you. Okay, this is a statement. We are confirming certain matters to you. We are confirming, okay, this particular part or this particular thing is there or is not there. So it is kind of supporting to the other audit evidence that you obtain throughout your audit. Okay, it is the support that you gain from the management for the other audit evidence. So when I say it's a support for the other audit evidence, so that means in standalone basis, a written representation cannot be a audit evidence because it is only in the nature of supporting. It only supports your other audit evidence. It does not become an audit evidence. So accordingly, that's why we have discussed multiple times that only written representation is not sufficient because of this reason that it is a supporting document rather than being an audit evidence. Okay. Tomorrow, let's say if I count that particular document as an audit evidence, I may ask management to give me a letter that there is no material misstatement in the financial statement, a representation like that, and I accept that, and on the basis of that, I can close audit. It will be a disaster if I do that because the same reason that I cannot rely individually on a standalone basis on a written representation. Okay. Here, when we talk about the term management or those charged with governance, okay, uh, here it may happen that based on the audit type, based on the engagement type, Let's say, for example, you are auditing an entity which has a multiple, categories of management, or layers of management. Or you may audit a particular, entity which is straightforward, the owner driven entity, promoter driven entity. So you need to interpret the term management or those charged with governance accordingly. Okay. Any doubt till now with respect to the basic understanding of written representation? Okay. Now, we need to understand what are certain matters for which we need to obtain written representation. Okay. So, the first matter that for which we need to obtain written representation is that management understands their responsibility. Now, can anyone tell me what is the management's responsibility? We have discussed multiple times. What is the management's responsibility?
Preparation and presentation of financial statements in accordance with the applicable standards.
Yes, very good. Absolutely correct. Yes. So here management has to provide about that they have fulfilled their responsibilities or about specific assertions. So these are the things that management has to confirm in their written representation. So if we go on page number 6.9 in your study material, you have a very wonderful chart which describes your SF 580 in detail. Okay. So the first one is that written representations that you need to obtain from management with respect to the responsibility of the management, that management has fulfilled their responsibility for preparation of the financial statement and for the completeness of the information that they have provided to the auditor. Means you ask management to confirm that you have given me all the informations, number one. Number two, you have fulfilled all the responsibilities that you are supposed to fulfill for the preparation of financial statement. Second, you need to obtain written representation with respect to the information that you gather with respect to other standards. For example, going concern related. So you obtain a written representation with respect to the going concern related that we discussed in the previous session. You may obtain written representation for some other things that we have discussed in past in with respect to other standards. So you obtain all those written representations for all those transactions. So transaction based or audit based, audit evidence based representations that you obtain. So this is over here. The second part which is given, that written representations as audit evidence. Okay. So you may obtain as to support that the written representation will support your audit evidence. Okay. So that is the second part that we need to understand. Support other audit evidence relevant to the financial statement or specific assertion. Okay. Now, third part that we need to understand is that what we need to do when we get the written representations. Okay, we take it from the management. Okay, management, this is a written representation you have given to me. But what then we have to do? See, when you get a written representation from management, you have to check with the other audit evidence. Is there something which is creating doubt about the representations that has been provided by the management? So is there something which is creating doubt about the reliability of the representations? And if yes, then you need to respond appropriately to that written representation. Okay, so you need to evaluate that representation and then you need to respond to that representation. If you identify that there is a doubt on the reliability. For example, management is saying, okay, we have provided you all the list of related parties. But during audit, you identify that there is there are some more related parties which were never disclosed to us. In that case, the representations that have been given to you are not reliable. The representations which have been provided to you are not reliable at all. And hence, it creates a doubt about the other representations also. Not only this one, this related party representation is already under, under scanner now. But by the virtue of this, doubt, or by the virtue of additional audit evidence that I have received, and I can conclude that the representation given by the management on related party is doubtful, that doubt, extends to other representation also. It's not only on that part, it goes to the integrity of the management, whether the other representations issued by the management are appropriate or not, with respect to going concern, with respect to your management estimates, with respect to your other items, whatever you may ask in the representations. For all those items, that doubt extends. And then we need to think and we need to rely or perform the procedures accordingly. Okay. So the third requirement of the auditor is to respond to those representations appropriately. Okay. Now we discuss that written representations in itself, on a standalone basis, they are not the audit evidence. So do not try to close audit procedures based only on written representations. No, that will be incorrect. Okay. So although written representations provide necessary support, they are necessary support, but they do not provide sufficient and appropriate audit evidence on their own. No. Okay, they don't provide it. Now, the next part that we need to understand with respect to the written representation is the date or the period covered by the representations. Now, tell me, would it be appropriate if I ask management to provide me representations as of date of start of financial year? Like, okay, provide me representations with respect to date of 1st April 2020. Let's say I'm doing the audit of 23-24. So 1st April 2023. Give me a representation dated that particular date. Do you think it is a good idea to get a representation of 1st April 2023?
No, sir.
And the reason that you think that it is not appropriate?
Instead of taking management representation for opening date, I would rather just go for the audit report that is there to look into.
Yes. Now, the thing here is that when we are obtaining the representations, we have to take the representations near to the date of audit report, so that, let's say, for example, I am writing in my representation, or I am asking the management to write in the representation that, okay, you have given me all the information about the subsequent events. Now, what if, if I take that subsequent event written representation on 1st April 2023, that's the start of a financial year? No use, total wastage. Why? Reason because subsequent events are something that happens after the end of financial year. Obtaining representations on the date of 1st April 2023 will not give you any comfort on the subsequent events, because management might not even be aware about any subsequent events on that particular date. So the date of the written representation should be near to your date of audit report or the financial statement, but not beyond the date of audit report. No. So it should be as practical near to the date of audit report, not beyond that. Clear? Okay. Now, if I obtain a representation beyond the date of audit report, it's something that I have issued my audit report without obtaining necessary and sufficient audit evidence, which should not be there. So some people may ask, what is the issue if I take a representation after the date of audit report? The issue is that in that case, you are issuing an opinion without obtaining sufficient and appropriate audit evidence that you should have earlier to express the opinion. The evidence that should have earlier to express the opinion, it was not there, and still you expressed your opinion. In that case, you may be held guilty for the professional misconduct, but for that purpose only, obtain all your representations before the date of audit report. Okay. So the date of written representations shall be as near to practical to date of audit report on financial statement. Okay. Now, another part that we need to understand here is about the doubt. I have already discussed if there is a doubt as to reliability of the representation, what should be done. If I have a doubt about, whether the written representations are inconsistent with the audit evidence, what should I do? In that case, simple, you need to perform additional procedures to resolve the doubt. You cannot leave that open. Okay. So you need to perform additional procedures to resolve the matter if you have a doubt with respect to reliability of the representation. And if you conclude that representations are not reliable, then you may take appropriate action. Appropriate action is you may, verify further that, okay, is there any material misstatement? Is there anything further that I need to check? I can also consider fraud risk because now the question is on the integrity and ethical values of the management. And integrity, ethical values, tone at the top is part of there is one component of internal control where I say the integrity, ethical value, tone at the top is part of that component. Which is that component of internal control? Come on, guys. There are components of internal control, and in one of the component, I say integrity, ethical value is something which is part of that component. Which is that component that we discussed in SA 315? Quick revision. Come on. No? Okay, tell me how many components are there for the internal control?
The 5 components are there, but not exactly recalling their names.
Okay. Okay. Anyone else? If they are, if some of the names are also there.
Sir, control environment.
Yes, absolutely correct. So there are 5 components. First is the control environment, which talks about the integrity and ethical values.
Yes, sir.
Then comes the risk assessment. Then comes the control activity, information communication, and then the monitoring activity. So these are the 5 components of internal control. Now, if I say I have a doubt on integrity and ethical value based on the doubt of the written representation, the doubt extends to the control environment, which is the component of the internal control. And then it may impact on the reliance of the internal control. Yes, just a doubt on the written representations may impact on the reliance of the internal control. Not only that, it may impact on your risk assessment of management override of control, the fraud risk, because now I have a question on the integrity. Now I have a question on the ethical value. There is a doubt that management might have already overridden the internal controls. So remember management override of control, which essay it was there? Come on. Management override of controls.
Communication to those charged with governance and fraud risk related that we
Something similar, yes. Anyone else? Management override of control. Where we
auditor's
discussed.
responsibility relating to fraud in financial statements.
Yes, very good. And what we discussed about the management override of control?
So there were the three areas where we said that there is a presumed risk of fraud. It was related to manual entries and estimation of accounting policies and the ratios they have to make while preparing financial statements. And third one was not recalling third one.
No issues. Anyone else would like to add something to this? No? Okay, I'll tell you. So when we discussed about SA 240, we discussed about presumed risk of frauds. One was with respect to the revenue recognition, another was with respect to the management override of control. Now, we discussed at that point in time that management is in such a position that they can, override the internal controls. And that can happen if there is a doubt on the integrity and ethical values that the management follows. So you have a higher risk of management override of controls. Now, for that, auditor has to perform certain procedures to test the risk of management override of control, irrespective of the auditor's risk assessment. So there were certain procedures, irrespective of the risk assessment, we need to perform those procedures. Testing of journal entries, okay, with respect to adjustments, financial statement closure, review of accounting estimate for the management biasness. Remember something that we discussed in SA 240? Significant transactions outside the normal course of business that are unusual and that are, something which is not, or there's a lack of rational behind those transactions. So for those things, we need to perform testing irrespective of the risk assessment regarding the management override of control. So see how a simple representation is impacting your fraud risk. Are you getting that?
Yes, sir.
Internal controls, the more testing I'm required to do. Substantive procedures, the more substantive procedures I will be required to do because I need to gather audit evidence from the substantive procedures. So one doubt on the reliability of the written representations is, creating such a ripple effect. So are you able to get this particular part? Any doubts?
No, sir.
Same happens when the management does not provide requested written representations. If management is not providing written representations as you have requested, in that case, it again, creates a doubt about the management, about the integrity of the management. Now, in that case, I need to assess why management is not giving me a representation. Is there something which is related to something, the management is not disclosing? Or is there something, management is not considering necessary? What is the reason for not providing the representations? And accordingly, I need to consider the effect on my audit opinion also. Now, if I conclude that there is a sufficient doubt about the integrity, okay, such that I say the written representations more that is I'm required to do.
So there is a video and voice lag, sir.
Yes, sir.
Am I audible now?
Yes, sir.
Okay. So I'm saying that if there is a missing representation, that management has not provided written representation, or management to say you are not relying on the written representation, as a conclusion of that, all the testings and everything will increase. Perfectly fine. But the possible effect of such part, or the possible effect could be that you may
एक्सक्यूज मी सर, सर आपका वीडियो और ऑडियो स्टक हो रहा
me
है।
mm, is just a minute. Let me check. Give me a minute. I'm able to see the net connection is perfectly fine over here. Ginny, if you can check at your end once. Okay. Now, the possible effect of such missing representation, okay, the possible effect of such non-providing of written representation could be pervasive also. As a result, you may decide to disclaim an opinion financial statement. Are you getting the point? So, because you have a reliability issue on the mechanical values, you may decide to issue a disclaimer for considering the effects of that particular information that you have, or the conflicting information you understand the opinion.
So your voice and video problem is still there, sir.
Mm, just give me a minute. Ashok ji, are you able to hear me? वॉइस ब्रेक हो रहा है, अभी आ रहा है?
So it happens when you try to speak a long sentence.
Issue. If you still feel, just let me know that you are not able to get the voice. Okay. Okay. So any doubt till now?
No, sir.
Okay. So that was your written representation in your study material 6.9, page number 6.9, SF580, in a very good and concise way. Have you completed the questions which are given beyond that? Like, for the other standards also, there are some questions which are already given, test your understandings. Yes, no, guys. Have you prepared? Have you practiced those questions? If not, yes, let's solve those questions because those are very, very important. Okay, let's solve those questions. And also, I have additional questions to discuss on whole SF 500 series, on chapter 5, chapter 6 in combination, that will be interconnected and will definitely enhance your understanding about all the topics that we have discussed till now. Okay. So let's discuss first test your understanding number 4 on page number 6.8. CA Suraj finds that the key financial ratios of a company like current ratio, debt service coverage ratio, inventory turnover ratio, trade receivables ratio are in red and have deteriorated considerably as compared to the last year. The company is also not able to pay its creditors on time. The company is requesting time and again to its banker to grant additional credit facilities. But the bankers are not listening. There have been significant losses to the company due to lack of response of the company's product in the market. As a result, many products are sold below cost. There have been situations where the company is not able to pay the salaries of staff on time. All these negative findings have led him to conclude that the use of going concern basis of accounting is not appropriate. He brings this matter to the knowledge of CFO of the company. What is reporting duty cast upon him in such a scenario? Okay, first question is, what is the reporting duty cast on CA Suraj in such a scenario? Number two, CFO informs him that the management in turn is ready to include in the disclosures the inappropriateness of the use of going concern assumption of accounting. So management is ready to include that in the financial statement. Okay. Now the next question is that how should it impact the auditor's opinion in case management itself disclose the inappropriateness of the use of going concern assumption of accounting? So these are the two questions. Read once again, take a minute, and then let me know the answer. Take a minute's time, read again. Yes. So tell me, what is the answer to this? What is the answer to the first question? That is, what is the reporting duty cast upon him in such a scenario? Come on, guys. What is the reporting duty of CA Suraj in this scenario?
He should not follow going concern assumption for accounting.
Okay. But reporting, what reporting he should do? What he should include in his report? What CA Suraj should include in his report when it comes to this particular scenario? Okay, I'll tell you. So, see, first of all, we need to understand that whether there is a significant doubt, whether there is a material uncertainty, or whether the use of going concern basis is inappropriate. Remember the three situations. We need to understand what is the situation over here. Now, first, the ratios are not good. Second, company is not able to pay its creditors. Company is requesting additional time and grant of facilities. Bankers are not listening. Significant losses are there. Company's product is not working in the market. Sold below cost. Situation is company is not even to able to pay salaries of staff on time. Now, here the question itself says that it has led him to conclude the use of going concern basis of accounting is not appropriate. Means it is beyond material uncertainty. The use of going concern basis is not appropriate. Now, if I conclude the use of going concern basis of accounting is not appropriate, and the management has used that basis, the only option left with me is an adverse opinion. And in the basis of adverse opinion, I have to specify this. Now, coming to the second question. Now, let's assume management is, they themselves are specifying that, okay, use of going concern basis is appropriate and we have included in the financial statement. Will this change your opinion? Yes or no? With the reason also.
Disclosure of inappropriateness by management does not dissolve auditor from giving his own adverse opinion. He will still be under a requirement to give adverse opinion.
Okay. Yes, very good. Anyone else would like to add further? Anyone? Yes. So, as appropriately said, that it does not matter what management has disclosed in their financial statement till the time I say that the use of going concern basis is inappropriate. Either management has to go on the liquidation basis of accounting or net realizable value of accounting. They have to change from the going concern basis, or if management is using going concern basis of accounting and then they are disclosing that okay, this is inappropriate, then it's just like I'm giving incorrect financial information, I'm giving incorrect financial statement, still my opinion will be adverse, because the underlying financial statement are not correct, are not as per the applicable financial reporting framework. Hence, it will not impact the auditor's opinion, even though management discloses the inappropriateness of the use of going concern assumption of accounting in the financial statement. Doesn't matter. Clear? Any doubt with this?
Sir, can you please reframe the answer for the CFO's part for reporting?
Sure. So, basically, if the management is preparing the financial statement on going concern basis of accounting, and then they are specifying in the notes to account that the going concern basis of accounting is inappropriate, means they themselves are saying that whatever financial statements they have prepared are inappropriate, and the opinion that you should provide on the inappropriate financial statement as a whole, which are prepared as a whole inappropriate with respect to the applicable financial reporting framework, is the adverse opinion. So the disclosure by the management that they have used the inappropriate basis of accounting, that is the inappropriateness of use of going concern assumption of accounting by the management in financial statement, will not change the opinion that you have issued. That is you will still continue issuing adverse opinion. Clear?
Okay, sir.
Any doubt with respect to this, guys? Any doubt? No? Okay. If no doubts, then let us see one more test your understanding. That is number 3. Okay. CA Somaya is the auditor of a company engaged in rearing of poultry birds and obtaining eggs from their farm. The company has performed very well since incorporation in 2013. Its sales had also grown, and the company had expanded its market from the native northern states of promoters to far-flung areas in the eastern parts of the country. Okay. However, since last 2 years, the company fortunes have nosedived. First, due to the effect of pandemic, and then due to the recent outbreaks of bird flu, thrice in a span of 2 years. The company's sale have dipped from around 50 crores to 10 crores. Further, a major part of the livestock was also wiped out during bird flu. Now, she is not optimistic about the going concern assumption followed by the management, that the CA is not optimistic about the going concern assumption. The management now wants to start with the new batches of bird. The earlier working capital facilities of the company granted by bank have also been restructured to support the business. She was informed that the repayments of the restructured working capital term loans are to begin from ensuing year. No fresh credit facilities have been granted by the bank. The company also plans longer credit from animal feed suppliers. Okay. The company plans to take additional measures to prevent safety of livestock, including aggressive vaccination, preventive health checkup, and more frequent visit to veterinary staff. The village in surrounding areas have accused the company of spreading air pollution. The management has prepared a cash flow forecast for her examination, discussed the approach to be adopted by the CA in examining the going concern assumption, keeping in the view view about with the specific reference to the cash flow forecast. Now, this is the whole scenario. Read once again, take a minute, and then try to answer the question. So read once again, and then try to answer the question. Yes. So what is the answer? So discuss the approach to be adopted by the CA in examining the going concern assumption, keeping in the view with the specific reference to the cash flow forecast. So what is the specific procedures that are required to be performed by the CA? Now, with respect to the cash flow forecast, what you will do? Come on, guys. How will you verify the cash flow forecast? We have done this. We have discussed this multiple times. Anyone? Okay. So how to, first of all, evaluate the cash flow forecast? Now, it is same that we have discussed in the SA 500 also. Okay. That when we are relying upon any information that is being provided by the management or information produced by the entity, we have to first examine certain things with respect to that information. For example, underlying data. What is the underlying data that has been used? whether the data is complete and accurate, whether that data is relevant. So the data that is used for preparing the forecast is relevant or not. Okay. Second, whether the method, assumptions, or estimates that are used by the management in preparation of the cash flow forecast are appropriate or not. For example, in cash flow forecast, a lot of assumptions and estimates are required for the coming years. Now, wherever I say estimate, there is one essay which gets triggered. Which is that essay? Anyone?
ऐसे 560.
Okay.
Sir, SA 540, auditing accounting estimates and fair value accounting estimate related disclosures.
Yes, very good. Yes. So whenever I talk about estimate, again, as a 540 comes into the place, and that I need to evaluate whatever estimates that management has used, or whatever estimates that management has prepared with respect to the cash flow forecast, whether there is a risk of management biasness, whether those estimates are appropriate. Then the question comes is whether the cash flow forecast has been prepared by the management or management expert, and accordingly I need to perform the procedures to evaluate whether the cash flow forecast is appropriate or not, whether I can rely on the cash flow forecast or not. Second thing is whether the cash flow forecast, okay, that has been prepared by the management is consistent with the other information that is available to you. And that is very important. For example, management is saying, okay, now next 3 years, my sale will get double. How? Is there some supporting evidence to that? Management is saying, no, we have a huge working capital available to us in the coming years that we will utilize, and then basis of that, we will increase the sale. Is there any evidence available for that? Is there any supporting documents, contracts already in the hand of the management that supports the future forecast? So you need to validate the future forecast accordingly. That okay, whether is there any additional evidence available which is supporting either future forecast or cash flow forecast, or they might also negate the cash flow forecast. For example, management is saying that okay, they will get huge working capital facilities in the coming years, but bank is not ready for that. With the recent discussion with the bank is straightforward denied any additional facility or the restructuring. In that case, you might say, okay, management has prepared the forecast based on the working capital capacity, working capital funds, but the bank has denied, means the evidence is not supporting the cash flow forecast. In similar case, in this particular question, bank is ready to restructure. If you see in the question itself, I need to evaluate from that point of view that the earlier working capital facilities of the company granted by a bank has also been restructured to support the business. Okay, means that there is working capital facility that will be provided to company and the bank is ready to restructure. Okay, no fresh facilities have been granted by bank. So fresh facility is not there. Just only previous facilities has been restructured, and company also plans to longer credit for animal feed suppliers. Means they will improve their working capital. Okay. So they will improve their working capital so that they can use that working capital for increasing the sale. So yes, the things as of now in the question are supporting the cash flow forecast, and these are the things that as an auditor I have to perform to verify the cash flow forecast. Any doubt with this one or with the answer? Any doubt? Yes, no? Are you clear with this? What auditor has to do? Okay, Ginny. Yes, thank you. Okay. If no further doubts, let us take one more question, one interesting question that is a kind of a combination, and that will will give a good clarity about certain topics. You are the senior auditing supervisor responsible for auditing Zenith Electronics Limited, a manufacturer of high-end audio equipment. Zenith's year end is 31st March 2024, and you are currently finalizing the audit with an expected sign off date of 15th May 2024. During the audit, you identified a significant related party transaction. Zenith sold a batch of discontinuous speaker to Audiophile Heaven Incorporation, that is an audiophile company, that is a related party, on 28th February 2024. Audiophile is owned by the brother-in-law of Zenith's CEO, making it a related party, okay, as per India's 24. The transaction was material, that is a 20% of the total annual sales. And your audit procedure confirmed the following. Valuation: the speakers were sold at a price that appeared to be in line with the purchase cost, plus a markup of 10% as charged in the case of other customers. The transaction was appropriately disclosed in the notes to financial statement as a related party transaction. On 10th May 2024, while reviewing the management representation letter, you noticed a passing mention of a product written from Audiophile. Upon inquiry, management informed you that the Audiophile returned the entire batch of speakers on 15/4/2024 due to unexpected quality issues. Management assures you that the return will be accounted in the next financial year and that no further disclosure is necessary in the current financial year statement. They argue that the initial sale was bona fide and the return is a separate event occurring after the year end. You have not performed any further audit procedures regarding the return as you believe your initial procedures on the sale were satisfactory. You are considering signing off on the audit report. Now you need to comment on this particular whole example or whole case scenario. Whether is there any requirement of additional audit procedures? Yes or no? If yes, then we will discuss with the reason. Read the question, take a minute, and then try to answer. Read the question, take a minute, and then try to answer. So, read it word by word, and then, focus and pay attention to each and every word in detail. So, this could be a combination of multiple standards that you need to answer to. Come on, guys. Now tell me, is the auditor correct by not performing any further audit procedures in this scenario? Yes?
No, sir.
No. Okay. And the reason?
Sir, since the entire stock has been returned, so stock is there still lying with the company itself, and they are showing that the stock has been sold, whereas a material markup is still lying there, and due to quality issue, such products were returned. So in future, that means ये सेल तो होने ही नहीं वाला है, वो entirely cancelled हो चुका है. तो सब्सिक्वेंट इवेंट भी आता है इस चीज में, एंड मैनेजमेंट ने अगर कोई एंट्री इंटेंशनली की होंगी टू हैव अ फ्रॉड हियर, even if the prices are at arm's length transaction price, but there could be high chances that the sale is not there, still they are representing that the sale has been made and a profit has been earned by them.
Okay. My another question to this answer is, why do you say this is a subsequent event? and why this requires adjustment. Okay, I understand this is a subsequent event that has happened after the financial year close, but does this require an adjustment as per financial reporting framework?
So the speakers sold were the discontinued speakers, means उनके quality में शायद पहले से ही कोई defect था, and the condition existed at the time of balance sheet.
Yes, absolutely correct. Now tell me whether the transaction was on arm's length price.
So information के हिसाब से valuation they have done is at a 10% markup. They charge in other customers case also.
Now,
So ये एक्चुअल में अगर हम देखें तो ये आर्म्स लेंथ ट्रांजैक्शन पे होगा ही नहीं, बिकॉज द क्वालिटी ऑफ द स्पीकर डज नॉट प्रोवाइड सच प्राइसिंग स्ट्रेटेजी.
absolutely. Arm's length price is not, it's not means that you what you charge to other customer. Arm's length price means what the product will fetch in the market from other customers. It is with respect to the product, not with the customer only. It is product and customer both. Now, here in this question, if you see, they were the discontinued speaker which was sold. Number two, it was sold to a related party. Number three, it was a material sale, that is a total 20% of annual sales. When the auditor performed the procedure on this sale, the first question should have come as per the, that whether this transaction is on arm's length price. Now, over there, when I identify a transaction that, discontinued speaker being sold at the market price, that is the, cost plus 10% markup, that raises a doubt for me. The first thing that raises a doubt is the transaction is not on arm's length price. It may appear to you because I charge on, to other customers on a similar basis, but that is for a good product, not for the discontinued product. In that case, the first question was, if it is not on the arm's length price, what is the rationale behind? So here the SA 550 will come into play. What was SA 550? Requirement with respect to transactions which are outside the normal course of business. Anyone? Requirement of SA 550 with respect to the transactions which are outside the normal course of business.
We would evaluate the rationale behind entering into such transaction, and whether the transaction is consistent with the management explanation that they are giving for such rationale, and then whether they have been properly accounted for or not, we will check it, and whether the properly authorization and approval process was there for entering into such transactions.
Yes, absolutely correct. So when I say first the transaction happened, which is outside the normal course of business, means selling of a product at the price which is beyond or which is more than the market price. Something it is not normal. So I need to check the rationale behind it. Why I'm selling at this much price to a related party. Number two, whether it is appropriately being authorized. Number three, whether it has been appropriately disclosed in the financial statement. Now here, the disclosure is appropriate. The transaction was appropriately disclosed in the notes to financial statement as a related party transaction. So there is not much information on the disclosure, but this disclosure was correct. As of now, we will not go on to the disclosure part. The next thing is the return in the subsequent year in the month of April. Now the evidence was already available before or at the end of financial year because these were discontinued speakers. And there was an unexpected quality issue because of which the return was done. Now this could be a scheme to inflate the profit and the sale and subsequent return. There is a fraud scheme which is sale and subsequent return. that you sell at the near to the year end, and then you get the returns in the subsequent period. It may be in the month of April or May. By this way, you inflate the sale on one hand, and pass on that the kind of the return in the subsequent. So you have a good profit in 1 year, and then the subsequent impact is in the next financial year that you will not be able to see. So again, there is a fraud risk involved. Now, I have a evidence available to me of subsequent event. Again, I will apply SA 560. Then I will consider the fraud risk factor with respect to this transaction. Okay, so the application of SA 240 will be there. So application of SA 240, application of SA 560, application of SA 550, all three together. And on the basis of that, you need to decide what procedures you will perform and the conclusion that you will get. Clear?
Yes, sir.
Any doubt with respect to this question? So let us see questions which are there. So first one was, evaluate management assertion that the return of the goods does not require adjustment or disclosure in the current financial year. We discussed that no, it requires disclosure. It is an adjusting event, a subsequent event as per SFI 60, and accordingly, this has to be appropriately reflected. If management does not amend the financial statement, then what you will do? If management does not amend the financial statement for this subsequent event, what you will do?
Qualified opinion.
And how will you mention that qualified opinion? Like in which paragraph you will provide the details about the subsequent event?
Basis of qualification, madam.
Yes, basis of qualified opinion paragraph where you will specify why you are qualifying. Question number second, analyze the implication of this event in context of SA 560 and 550, which we have done. Recommend the necessary audit procedures you should perform to obtain sufficient and appropriate audit evidence regarding this event. So what we discussed is, number one, we will understand what was the rationale of selling the goods at a price higher than the product price, okay, even though they were discontinued one. Number two, what is the rationale behind the company to return this particular product? If we already knew they were discontinued, then why they were sold? So we need to understand from the fraud risk also, that is there something that it was done purposefully because there was a related party involved in this. So we have to consider from that particular angle. Number three, you need to also evaluate. We may also go a step beyond and evaluate what are the other transactions that have been carried with the audio file, not only in the current year but in the previous years. So the other transactions that have been carried with the related party, whether those transactions are also of a similar nature, and out of those transactions, how many transactions are of such nature where they have returned back the goods. So by analyzing those things, I can get more information about whether this is a genuine return or whether this return is a fraudulent return. Whether something similar was done also last year, What is the implication of this particular transaction on the profit? Is there any pressure? So I will evaluate the fraud risk factors. The pressure, that is there any pressure on the management or any incentive to perform this task, to perform or inflate the profits? What was the rationalization behind? And the third factor, basically, I talk about the opportunity. So management is in position to override the control. So they can easily do that. They have the opportunity. So all the three fraud risk factors will be evaluated. And on the basis of that, the appropriate and sufficient audit evidence will be gathered. And we have discussed the impact on the auditor's report, considering the various possible scenarios. Like if we conclude that yes, that was a fraudulent transaction, that was there to inflate the sales, this is a subsequent event, management has to rectify. And if management does not rectify, first of all, there will be a qualification in your audit report as per SA 705. Number two, you may also perform additional procedures to identify such type of transactions with other related parties. Because now you have, there was a fraud. Okay, there is a fraud involved. First of all, you concluded that. Now another question comes is there any other area where there is a fraud? Because now the integrity, ethical value of the management is in question. Control environment is gone. The control reliance has fallen down. Management override of control is a high risk. So considering all that stuff, I need to perform additional procedures, audit procedures. And then on the basis of that, I need to conclude. Tell me, is there any other reporting obligation on the auditor if auditor identifies this is a fraudulent transaction? Any other reporting obligation on auditor?
So if the fraud amount involved is above 1 crore, then the central government reporting will come into picture.
And if it is less than them?
Less than that, then the board of the company or the management, those charged with governance.
Okay. Any else other reporting requirement that you think might be there?
Related party transaction related reporting requirement.
No, that is there. Like the disclosure in the financial statement about related party, it's there. Apart from that, and that is the management's responsibility to disclose in the financial statement.
तो बोर्ड रिपोर्ट में जो डिस्क्लोजर होना चाहिए थे वो है या नहीं चेक करेंगे.
Auditor's responsibility. Okay, I'll tell you. So whenever it comes to the reporting responsibility, it's not only reporting in the case of audit report, but we have to also consider the implication of reporting the transaction to regulatory authorities plus to those charged with governance under SA 260. So SA 260 is also very important, where we have to communicate the matter to those charged with governance that this matter has been identified, except when they themselves are involved in the transaction. So if you identify a transaction which is a fraudulent, SA 260 requires you to report that particular matter unless those charged with governance are themselves involved in that particular transaction. So reporting to those charged with governance under SA 240 and 260, reporting to central government if it is more than 1 CR, reporting in your audit report. Even sometimes we have to, if CARO is applicable, we will see that, reporting in the CARO is also required. So these are the reporting requirements and the impact on the auditor's report. Any doubt with respect to this question?
So in practical, if such type of transactions are happening around, what management afterward do with this discontinued stock, which is afterward returned by such related parties?
Okay, let's extend this question to answer your particular question. Now, let's say this particular part in the next year is lying into the inventory. Okay. So if I had to extend this question, I would say assuming in next year the discontinued speakers are part of inventory and have been kept at warehouse of management. Specify the audit procedures that will be performed over the existence and condition of discontinued speakers. Now, this is the continuation of the question that we were discussing, and this will answer your question also. So, what procedures you will perform to verify the existence and the condition of the discontinued speaker in the subsequent year?
How stock taking is performed by the management regarding to the quantities that have been received in return, what procedures afterwards they perform on such inventory, whether they make any further process to make them sellable condition, and if such a process are happening, then how they convert it and how they finally sell it, or they sell totally as a scrap.
Yes. Very good. And which essay will come into play?
So account ऑडिटिंग इन्वेंटरी से रिलेटेड स्पेसिफिक एरियाज का जो ऑडिट प्रोसीजर का था हमारा ऐसे वो.
If anyone can tell me the number and the name.
Sir, SA 501.
Yes. Yes, very good. The name?
Audit evidence,
Specific consideration for selected items.
Yes. Yes, very good. So, SA 501 talks about specific consideration for selected item which has inventory with respect to the existence and condition of the inventory. Now, in this question that we extended, here we are talking about the discontinued speakers. As a part of the audit procedures, I need to verify the existence. Number one, it has been written and kept appropriately. Number two, the condition. If they are of such condition that they could not be sold in the market, whether management has booked a provision on this particular inventory. If not, then I may need to ask management to book a provision and reduce the value. Usually, the accounting, the policy for the inventory that we use is the cost or NRV, whichever is less. Now, here, if that is a discontinued speaker with the defect which was written, obviously the NRV is way below than the cost. Now, in that case, either it should be recorded on the NRV and management should book a provision to bring it to the NRV, okay, from the cost, or appropriate adjustment should be given, or else management has to, repair and recondition this inventory. So whatever has been done by the management, let's say management did not do anything. The inventory is lying as a discontinued only. No changes have been performed. No repairing, no anything has been done. It is kept there and recorded on the cost. I need to ask management, book a provision because this is a discontinued speaker. This is a non-moving item. You have to book a provision on that and bring it to the NRV. Number one. If management doesn't do that, I have to qualify my opinion. If management does that, I may choose to bring that particular information to the users. We will see how to bring that, attention of the users on that particular information in subsequent sessions. But I may choose to do that, and I may use emphasis of meta paragraph. I'll tell you in the coming sessions that how to use that. Okay. And accordingly, I may perform the audit procedures. So this is something we can management, we need to do as an auditor with this particular inventory also. Or the management can do also, like, repair or keep it in the same way, provide for the, value of the inventory. So these are the things management can also do. Clear? Any doubt? Okay. If no further doubts, what I propose over here is let's take a quick 10-minute break. After the break, we'll gather back and continue with more questions. So I have more questions to discuss on multiple topics that we have done till now. It will enhance your understanding about the topics. Trust me. Okay. So let's take a quick 10-minute break. Thank you. Hello, everyone. Let's continue the discussion. Okay. Now we will take up one more question on the similar lines. Okay. We will discuss one more question that will help us to, understand more the topic in much more detail. Okay. The question is bit, case scenario based. It will encompass a lot of concepts. So let's read it first and then we will discuss the answer of the questions. Okay. So the first thing, the background that is given is that you are the audit partner at the Zenith and Company responsible for auditing of Stellaris Tech Limited, a software development company. Stellaris has been experiencing significant financial difficulties due to increased competitions and delay in launching a crucial new product. During the audit year ended 31st March 2024, you identified the events and conditions that cast significant doubt on Stellaris' ability to continue as a going concern. This includes recurring losses. The Stellaris has incurred substantial losses for the past 2 years. Negative working capital. The company has a significant working capital deficit. Loan defaults. Stellaris has defaulted on several loan covenants with the primary lender. Loss of key personnel. Several key software developers have resigned due to delayed salaries payment. Legal dispute. The company is involved in a legal dispute with the former customer, claiming the significant damages. Now, management response. Stellaris management acknowledged the financial challenges, but believes the company can continue as a going concern. They have presented a plan to mitigate the going concern uncertainties, which include securing new financing. The management is in negotiation with a venture capital firm for significant equity investment. They have provided you a draft term sheet outlining the proposed investment. Cost reduction measures. The management has implemented cost cutting measures, including salary reduction and layoffs. Settlement of legal dispute. Management believes that the legal dispute will be settled favorably out of the court. Now you perform the following audit procedures. 1. Reviewed the management assessment. You reviewed the management assessment of the company's ability to continue as a going concern, which covers the 3 months from the year. You evaluated the management's plan. You discussed the feasibility of management plan with the management and obtained supporting documentation, including the draft term sheet and the cash flow forecast. The assumptions regarding the settlement of the dispute is based solely on the management optimistic view and supporting provided by the management expert. Analysis of the cash flow forecast. You reviewed the cash flow forecast prepared by the management, which project positive cash flow within the next 3 months. However, you note that the cash flow heavily rely on the successful completion of the equity financing and the settlement of the legal dispute. The cash forecasts were prepared using the data of sales projection that were based on financial year 2021. Obtained written representation. You have obtained written representation from the management and those charged with governance regarding their plan for future action and the feasibility of these plans. The financial statement do not adequately disclose significant doubts about the company's ability to continue as a going concern, as management is of the opinion that this year was tough for the company, but management has plans to bring the company back on track and hence no disclosures are required. So you as an auditor have to comment on each and every item one by one. Let's first start with the review of management assessment of going concern. So as an auditor, what will you comment on this? Whether the appropriate audit procedures have performed or not. So take a minute, read the question for on the question or part of the scenario and management response once, and then we'll go area by area with the audit procedure. Okay, so take a minute, read the management, read the background and management response. Okay, So I hope you have read the question, the background, and the management response. Okay. Now we will go to area by area. Okay. To the audit procedure. The first one is reviewed management assessment. So auditor reviewed the management assessment of the going concern or company's ability to continue as a going concern. You tell me whether the audit procedures performed are appropriate. If yes, then the reason. If not, then why not with the relevant uh, provision of the standard. So the first one, management's assessment on the company's ability to continue as a going concern. Come on, guys. What do you think? Is this appropriate? What has been performed? Yes, no?
So only review of management assessment is not sufficient, as the management is also taking help of their expert. So we also have to check about the experts' professional competence, its expertise and knowledge, and what kind of assumptions they are taking for supporting their assessment.
Okay. Anything else you think like, okay, specific to the management assessment, is there something that, what are the things the auditor should look into when he is evaluating the management's assessment of company's ability to continue as a going concern? If you as an auditor have to evaluate the management's assessment, what you will see, what important elements you will look for? Anyone?
Sir, the auditor will check the management's plan, and then that how they come about.
Yes, yes, please go ahead.
Uh,
Management plan, that how they have performed the assessment.
yes, sir.
Okay. What else they will look, auditor should look into?
And whether whether they have planned appropriately, and the assessment procedure they have performed, the outcome and results of that procedure, the auditor should check.
Okay. Okay, first of all, which essay we are talking about here for the management assessment of entity company's ability to continue as a going concern? Very
SA
simple.
Say
570
570.
going
Perfectly
concern.
fine. Yes. Now, the first thing that we need to understand that how the management has performed the assessment. Okay. When we are analyzing the management assessment, we need to understand the period covered by the management assessment. Here, the management has covered only 3 months from the year end, and that is something not appropriate. At least it should cover 12 months. If the management has covered a period less than the 12 months, remember we discussed that we'll ask management perform it again by considering the period of a 12 months at least. Do not consider only 3 months, because 3 months is a very short term. It's a very short period, and you should consider a longer period for the assessment of company's ability to continue as a going concern. So the 3 months assessment is not appropriate, is not adequate. Is it equal to management has not performed any assessment of going concern?
Yes, sir.
Remember?
3 month पे तो ध्यान ही नहीं गए.
Yes. So, in that scenario, what we need to understand is that what data has been considered by the management and what period has been considered by the management to perform the assessment. Both things are required to be understood, and then we can say, okay, the assessment is appropriate or not. But again, how will you evaluate the appropriateness of the assessment? Can anyone tell me, apart from verifying the data, apart from verifying the period, what else you would do? Apart from verifying the data, apart from verifying the period or the time taken by management, what else you will check in the management's assessment?
Some material certain or uncertainty relating to the going concern assumption exist or not.
That is a requirement. But as an auditor, what I will look into or how I will check management assessment?
Sir, which method the management has used for the
Yes.
for
Continue.
the assessment of the going concern, ability to continue as a going concern, and
Yes.
also the assumption and model taken by the management. The auditor should check that also.
Yes, absolutely correct. Anything further to add to this? Anything further you should add to
Sir,
this?
whether management has considered the subsequent event also. Sir, sorry, there is some noise.
No issues.
Uh, the management has considered the subsequent event in the financial statement, whether any adjusting event, whether they have adjusted or not, and if some are required to disclose, then also the management should, the auditor should check about that.
Okay, yes. So basically, if you understand, see, how will I analyze the management assessment is simple. First of all, I check the method, I'll check the assumptions, I'll check the data, I check the period. These are the four things I'll check. And then, as an auditor, I by myself will perform an assessment with the same data, with the same period. And I will evaluate whether the outcome that I am getting from my assessment is similar to the management assessment or not. And then by comparing both, I can conclude whether management has performed the assessment appropriately or not. So this is something I can do as per SA 570 to understand whether the company's ability to continue as a going concern assessment is performed appropriately or not. Okay, so that was the part number one. Now, second is evaluate management's plan. You evaluated management plan. You discuss the feasibility of management plan with the management and the term sheet, cash flow forecast, assumption regarding the settlement of dispute, everything. And this was the audit procedure performed. Now tell me whether this is an adequate procedure or something additional was supposed to be performed. Or is there something that has been missed out by the auditor with respect to the management's plan? So the second point is evaluated management's plan, including the feasibility of management plan, supporting documents, legal dispute. So what do you think? Is there any additional procedure that should be performed for this? Or what auditor should look for?
Since management has provided the draft term sheet for a proposed investment and negotiation with the venture capital firm, we would further assess whether the negotiation are in such a way or on the way to be confirmed, like sanction letter or agreement, particularly whether there is in place for such equity investment through which they are proposing to finance their funds.
Yes, very good. What else? Anything else that you think might be performed by the auditor?
Their forecasts also depend upon the settlement of the legal dispute. So I would also check for the legal dispute status. What status is there regarding such legal cases, and what outcomes are probable, which would have impact on the management's ability to generate funds, or whether there would be any heavy penalties or liability for such legal cases.
Yes, yes, very good. Anyone else? There is one more element that I will verify over here with respect to this particular part.
Sir, here the auditor has uh, disclosed about the management expert. The entire work,
Assessment.
entire assessment has been done by the management expert, and the auditor should also check the uh, com- capability,
Yes.
objectivity. Uh, Actually, sir, third C,
Competency.
competency of the management expert.
Yes. Yes. Very good. Very good. Remember SA 500 where we discussed about management expert. So, okay, there is a draft term sheet. So the first part is the draft term sheet and the draft plan for the investment. Now, it is just a plan. We need to see the supporting documents, whether the negotiation have been have been forwarded. What is the status of the negotiation? Whether they have the venture capital firm ready with them, or it is something just a proposal only. Like they will go to somewhere to some venture capital firms and present this particular part. So they don't have the venture capital firm in the hand, but they have the plans. So what is the stage of the investment basically? That is the first thing. Second thing about the legal dispute, because cash flow is basically dependent on the resolution of the legal dispute. So here the legal dispute and the outcome is that has been assessed by the management is by the management expert. Now, if you see, management believes that the legal dispute will be settled favorably out of the court, and that is based on the assessment performed by the management expert. Solely by the management expert. It is said that solely on the management optimistic view and supporting provided by the management expert. Now, the question comes is, can we directly rely on the management expert? And the answer is no. SA 500 again will come into the picture. If any work has been performed by the management expert, we need to understand the CCO, that is the competency, capability, and objectivity of the management expert. Number two, we need to ensure the data that has been used by the management expert, the assumptions, method, model that has been used by the management expert to come to a conclusion. Okay, for example, is there any favorable judgment that will point towards the favorable outcome, precedent available, or is there any steps taken by the customer to settle the dispute outside the court, and is there any evidence available on the hand which points towards that the management will be able to settle favorably outside the court? So just supporting provided by the management expert is not enough. We need to evaluate the work performed by the management expert. We need to evaluate whether that work that has been performed by the management expert is appropriate, whether that is sufficient enough, by understanding the methodology, by understanding the assumptions, whether that management expert is subject to any quality control standards, So that will also, add up to the competency and capability of the management expert, the objectivity of the management expert. And on the basis of that, I can conclude, yes, the outcome that has been predicted by the management expert is appropriate in the scenario or not. And if I say that is not appropriate, then the cash flow will go on toss for sure. Okay. And I need to evaluate management biasness for this particular kind of estimate, because this is the estimate also. The outcome of a legal dispute is an estimate. Okay. So I also need to check for the management biasness as per SA 540, whether the optimistic view of the management is something is there, or it is just a management biasness towards a positive outcome. So if I talk about, I will not only refer to SA 500, but I will also refer to SA 540 in this scenario.
So SA 501 also would come into picture now for litigation and claim.
Okay. Now, why SA 501 will not come into play? Can anyone tell me why it should not be referred over here? So there is a specific reason why I'm not putting SA 501. Anyone? Bonus question. Okay. What was the requirement of SA 501 with respect to litigations and claim? Can anyone tell me?
Inquiring management regarding the litigation and claims that are there pending against the management or the entity, reviewing their legal expenses account and seeking direct communication with the legal counsel and having
So,
a letter of inquiry.
but to identify what? That is the question. To
So
identify
when
what?
they have properly presented their obligation related to the legal case status.
Okay. So if you see SA 501, its specific considerations are there, but there is a assertion attached to those specific consideration. For example, when I talk about inventory, it is existence and condition. When I talk about this segment, it is presentation and disclosure. And when I talk about litigations and claims, it involves completeness of litigations and claims. Like if whether management has disclosed all the litigations and claims that was supposed to be disclosed. Is there any undisclosed litigation or claim or not? So when I talk about SA 501, it talks about completeness of litigation and claims. If a litigation or a claim is already disclosed, that might not fall under the requirement of SA 501, because it will only talk about the completeness.
Yes, sir.
So SA 501 focuses on identifications of litigation and claims. Okay, management might have not disclosed to you to ensure the completeness. Here we are talking about already a disclosed litigation. Clear? Any
Yes,
doubts?
sir.
Why SA 501 I did not quote? Okay. Let's proceed then to the next one, cash flow analysis. So you analyze the cash flow. This is the cash flow. Again, you tell me whether this particular analysis of the cash flow is appropriate. Can you rely on this analysis, or there is something else you should perform? Pretty easy, trust me. We have already discussed this part before also. Come on. Cash flow analysis performed by the management.
Sir, the auditor should not completely rely on this cash flow forecast, as I think firstly it is prepared for 3 months and not for 12 months.
Yeah.
And it is only based on the equity financing and the settlement of legal disputes, and the in the cash flow, the operating activity is very much important thing, and in this the auditor did not have mentioned anything
No,
about.
no. So they say that that cash flow or forecast heavily rely on the successful completion of equity financing and legal dispute settlement. Means they are saying that they have taken that assumption basically over here to prepare the cash flow. So they have shown the operating part only, operating part also, but after taking this assumption of equity financing and settlement of legal dispute.
ओके सर, देन सर इक्विटी फाइनेंसिंग अगर उन्होंने लिया है तो वो इक्विटी फाइनेंसिंग में उनकी लायबिलिटी को इंक्रीज करता है, और जो लीगल डिस्प्यूट इनका सेटलमेंट हुआ है तो उससे भी उनका कैश फ्लो डिक्रीज हुआ होगा, यानी
Equity
डिस्प्यूट.
financing will increase your cash flow. You will get money in your bank.
बट सर लायबिलिटी भी तो इंक्रीज होती है.
Share capital, it will be share capital where it will be liability.
यस सर.
So cash equity financing will give you cash in your hand for the cash flow for the operating activities.
यस यस सर, यस सर, सॉरी.
Any other thing that you might feel that okay, this should have not been done, or this is not
Yes.
appropriate?
Cash flow forecast uses the data of sales projections that were based on previous financial year, whereas the question that we read above suggests that the delay in launching of the crucial product was there. So the sales figures may not be same as that they were in 2021.
Yes. So FY 2021 was the sales data, and we are doing audit of 31st March 2024. That is 23-24.
Yes.
Absolutely correct. So see, first of all, cash flow for the next 3 months. Even 12 months is also not sufficient for cash flow. I said for the going concern assessment, 12 months is minimum required. But cash flow for the 12 months is just 1 year. To support whether the company will be able to earn that kind of income in the coming years, you need to at least have 3 to 5 years of cash flow forecast. Okay. So 3 months is a very, very short term. Very short term. Trust me. Number two, you note that the forecast heavily rely on the successful completion of equity financing and legal dispute. We have already seen that legal dispute, equity financing, it in itself is under the discussion part, like it is
And the negotiation.
yeah, negotiation, or even the legal dispute is based on the management expert. It itself is something dicey, not sure. So cash flow, if that is taking the assumption of equity financing and legal dispute, I will again raise a question on that these assumptions are not appropriate. Okay, because that will not give you the correct cash flow. Third, the data that has been used. Remember, whenever we were talking about if there is an information produced by the entity, we have to check on the data that has been used by the management, the relevance of the data, reliability of the data. Do you think the data that has been used is relevant here? Answer is no, straightforward. Reason because company was doing substantial losses for past 2 years. If you see, so past 2 years will be here 22-23 and 23-24. But the data we are using is before that 2021. So this will not encompass, it will not include the losses the company is making, the reduced level of sale it is doing. In that case, the data is incorrect, not relevant. The cash flow forecast will not be correct. So this cash flow forecast, again based on the SA 500, is not prepared appropriately. Again, SA 570 also will come into play. because that also talks about evaluating the cash flow forecast for the going concern basis. Now the last part, written representations. So you have obtained, but management has not disclosed the significant doubts about the company's ability to continue as a going concern in the financial statement, because company thinks that company will bring back the company on the track. Management thinks the company, they will bring the company back on the track. What do you think? Comment on this part. So do you think the management's contention that they are not required to disclose is appropriate?
No, sir. And disclosure about the material and uncertainty is not there in the financial statement, so the qualified or adverse opinion should be given.
Yes, absolutely correct. So here there are three things that we need to understand. Number one, management is required to disclose significant events and conditions that are resulting into a material uncertainty. There is a material uncertainty. Whether the use of going concern basis is appropriate or not is a separate question, secondary thing. First is a disclosure of material uncertainty. Yes, we can say there is a material uncertainty that caused significant doubt about the entity's ability to continue as a going concern, and that should be disclosed in the financial statement. Okay, if management has not disclosed, qualification should be there if management is not ready to disclose. Now the second question comes on the entity's use of going concern basis of accounting. We may say that okay, material uncertainty is there, but still use of going concern basis of accounting is appropriate. So I will show you one example, okay, that is similar on like, that, okay, uncertainty is there, but still use of going concern basis of accounting is appropriate. So this example will make us understand about, that how the disclosures are made. I would recommend do not focus on the name of the company. It's just the example I'm going to show you. So please don't focus on the name of the company. It's a publicly available data with the, that information is available publicly. Just a minute. Let me open it for you. Okay. Just a minute. I'll show you the relevant paragraph so that we can, have a good understanding of the topic. Okay, here it is. So there is a material uncertainty relating to the going concern paragraph in the audit report, basically. This particular paragraph is something that we have to disclose as per SA 570. Okay, so we will discuss this particular part over here, that how it is being reported. Now, what is reported over here is that we draw attention to the note 39 of the consolidated financial statement, wherein the auditors of this particular company have highlighted the material uncertainty relating to the going concern of this particular company. However, the financial statement of this has been prepared on a going concern basis for the reasons stated in the aforesaid note. Okay, so there is something note 39 will go on to, and the auditor is saying no, there is a material uncertainty, but still the financial statements are prepared on the going concern basis because of the reasons stated in the aforesaid paragraph or aforesaid note. Means auditor is saying that, okay, we are fine. It is prepared on the going concern basis, but there is a material uncertainty. So after having material uncertainty, the going concern basis is appropriately fine. Again, if you see this particular paragraph, that we draw attention to the note number 40 of the consolidated financial statement regarding the group's ability to meet its obligation is dependent on certain events which may or may not materialize, including restructure of the loans, time-bound monetization of asset, and realization of regulatory or arbitration claims. The material uncertainty which could impact the group ability to continue as a going concern. So there are material uncertainties they are talking about, okay, which could impact the group's ability to continue as a going concern. However, the group is confident of meeting its obligation in the normal course of its business, and accordingly, the consolidated financial statement of group have been prepared on the going concern basis. And our opinion is not modified in respect of the above matters. Means they are saying that, okay, there is material uncertainty which is dependent on the group's ability to continue as a going concern on the basis of, realization of assets, realization of regulatory or arbitrary claims, restructuring of loans. So there are different things on basis of which the claim is dependent or the material uncertainty is dependent. However, even after having material uncertainty, the group is confident that they will meet the requirements, they will somehow manage the business, and it will continue in the future. And that's why the going concern basis is appropriate, and our opinion is not modified. So this is how the disclosure is done. When you say there is a material uncertainty, but still the going concern basis is appropriate. So this is how it is reported in the audit report with respect to a separate paragraph on material uncertainty relating to the going concern. When you say there is a material uncertainty, appropriate disclosure is also there because we are referring to the disclosure of management. So appropriate disclosure is there, material uncertainty there, going concern basis is also appropriate. Everything is there. So this is how it should be reported in the audit report. Clear? Any doubt with this?
Clear, sir.
So this shows, like, this is one live example, or you can say practical example that is there based on the publicly available data that, okay, this is how, the material uncertainty paragraph is required to be reported. I will also show you these notes, note number 39 and 40. Okay, so that you can understand how management does the disclosure. Okay. See, note number 38. The net worth of certain subsidiaries and associates has eroded due to losses incurred. In the view of continuous financial support of the parent company, the account of those subsidiaries has been prepared on the going concern basis. So management is highlighting that there is events that are casting doubt on the entity's ability to continue as a going concern. But still, because of the parent company's support, they will be continuing their existence, they will be continuing working, and that's why the going concern basis have been adopted. Note number 39, on the similar line, the particular entity has initiated discussions with the lender towards achieving the debt resolution. Furthermore, on this particular date, this tribunal allowed appeal filed by the company and directed the particular regulatory authority to formulate a suitable mechanism for compensation against this particular, the issue and the foreign exchange issue which were there. In the view of expected positive outcome of the above, the financial statement have been prepared on the going concern basis. Now here they have specified the details of the dispute, the event. The date is there. Particular discussions, initiated discussions are there. Appeal has been allowed to be filed. Okay, for the reduction of particular items and for the compensation to the company. So appeal is also admitted. Discussions are initiated. There is a date given. There is an information given, and on the basis of that, they are saying that prepared on the going concern basis. And the third part, which was note 40, that is, in addition to the settlement of substantial portion of the external debt by the parent company, the group is also confident of meeting its obligation by generating sufficient and timely cash flow through monetization of this particular asset and other assets of certain subsidiaries, and the realization of amount from various regulatory and arbitrary claims. Anything notwithstanding the dependence of these material uncertain events and realization of assets and claims, the group is confident that such cash flow would enable it to service the debt and discharge the liabilities in normal course of business. And accordingly, going concern basis has been adopted. Again, so they are giving some information about the going concern basis. Okay, this is there. These are things there, but this is how we are planned. We have planned to continue the business, and that's why the use of going concern basis is appropriate. So this kind of disclosure is required by the management. Disclosure required by management as per applicable financial reporting framework. And that you need to evaluate whether the disclosure is appropriate or not. If appropriate, the paragraph that we just now looked into, material uncertainty, will be reported in that way. If not appropriate, that will turn into an adverse opinion or qualified opinion based on the details which are missing. Clear with this?
Yes, sir.
Any doubt? So this will help you to understand the practical application of this particular assay and the practical reporting of this particular assay. In the similar fashion, if we go back to our question that we were discussing, okay, here also we need to evaluate the management's disclosure from that point of view. If there is a disclosure, we will give a material uncertainty paragraph to report in our report as per SA 570. But here the management has not performed any disclosure. As a result, we will qualify our opinion. Okay. Also clear with this particular question?
So, the audit report which you just shared with us, in that case, the parent company was supporting them. And in our question, there is no internal party or parent institution which is supporting them financially. Management is only depending upon the outside source that like equity financing and the result of that legal dispute. So we
Yes.
can say that in our case, the continuation of that going concern assumption is not appropriate for us, even though they are having that a strong gut feeling that they would survive.
Yes, you can say that. That is there because the conditions that are given in the question are pointing towards a scenario where, the going concern basis is not appropriate. Again, a lot of factors are there that we need to evaluate before we come to a conclusion. Okay. It's usually not that much straightforward. But yes, in this case, you can say that, okay, the going concern basis, if other things are also falling, in the line, you can say that, yes, the going concern basis of accounting that has been used by the management is not appropriate.
That's why we will give our qualified opinion in our question, no, sir?
If the going concern basis of accounting is not appropriate, in that case, adverse opinion, not even qualified.
Okay, sir.
I'll show you one more example, a recent example of this particular paragraph. Just give me a moment. I'll open one more recent example of this paragraph. Okay. Again, I will request not to focus on the name of company. It's a publicly available data. Okay. So this is the recent example. Again, material uncertainty relating to the going concern paragraph, which has been given in the standalone financial statement. So we draw attention to the note number 22 of the standalone financial statement, where the company is a guarantor for the loans availed by the subsidiaries, which have fallen due for the repayment and its current liability exceed the current asset, indicate that the material uncertainty exists. Okay, that may cast a significant doubt on the company's ability to continue as a going concern. However, the standalone financial statement of the company have been prepared as a going concern for the reasons stated in the aforesaid note, and our opinion is not modified in respect of the matter. And if we go to the notes 22, if you go to that particular note and if you read that, we will get the understanding, okay, why management is saying that, going concern basis of accounting is appropriate. So here is a note 22. The company is a guarantor for the loans availed by certain subsidiaries companies which have fallen due for the repayment, and it exceeds the current liability. The current liability exceeds the current asset as on 31st March 2024. The company is confident of meeting its obligation by generating sufficient and timely cash flow through monetization of assets and realization of amounts from various regulatory and arbitrary claims. Notwithstanding the dependence of these uncertain events, the standalone financial statement of the company has been prepared on the going concern basis. So based on this, the company has prepared on the going concern basis, and accordingly, they have highlighted about the material uncertainty. Clear?
So, the company here is guaranteeing the loans for the which have been taken by the subsidiary companies, and the statement here is the assets are falling short for the as compared to the current liabilities. So this statement is relating to the company who is giving guarantee or the subsidiary company?
Subsidiaries. It is related to the subsidiaries.
Okay, sir.
There are other information in this financial statement that are worth reading and that will give you more clarity on the how things are structured and why it is, given that going concern basis is appropriate. Okay. So just to, that it's not just a one information, there are multiple information. For example, I'll show you that there is a one-time settlement agreement, reversal of finance cost, a lot of things are there. Okay, by the lenders, provisions, a lot of things are there. So right equity is there. Okay, so warrants, conversion of equity, number of shares, a lot of things are there which are going on in the picture and which supports the management assumption of going concern basis.
Can we access this report on internet, or will you share this report for studying us?
It is available on the public. You can just, search it on Google. It will be available.
Okay, sir.
Okay, so that was a good question on SF 570 that we discussed. Again, we saw the practical example in the one of the annual report where it has been explained that how you need to use this particular reporting paragraph. Okay. Now, what we will do is we will solve some.
Sir?
Yes.
Sir, can you please upload this question answer which you asked?
So after the session, it will be uploaded. Once the chapter 6 is done, chapter 5, 6, all both questions will be, these will be uploaded on the portal.
Okay, sir. Thank you, sir.
Okay. So if no further doubts, I have few more questions to discuss so that, it will again, help us to understand further on this topic, whatever we have discussed till now. Okay. So these are the good questions and interesting one. Again, on related to chapter 5 and 6 together. So the question is, Opal Stones Private Limited is a renowned brand dealing in rare earth and precious stones. Management of Opal Stones Private Limited hired an expert to value their inventory of rare and precious stones. The company had the following valuable stock, okay, valuable gem stock. So Tanzanite, quantity 3, total carat, rate, and this is there. Royal Dematoid, blue garnet, black opal. So all these are there with the company. And this is the valuation by the expert per carat, valuation by the management per carat. So this is something the valuation has been done by the management and by the expert. Okay. Unlike last year when the expert valuation was adopted, this year management decided to value the inventory of gemstones as per the rate decided by them, which was based on the fair market value calculated by the management. These rates calculated by the rates calculated by the expert were based on the average rate fetched by the various companies in the industries in the past 3 years for the sale of same kind of gemstone. So there is a rate that has been that has been given by the expert, which is based on the average rate that is fetched by the various companies in the industry in past 3 years for the sale of same kind of gemstone. Mr. Akash, an audit executive from the audit team, inquired with the management with respect to the rationale behind not accepting the valuation done by the management expert. Management explained that the estimated value per carat is based on the market value they can fetch. Mr. Akash requested management to provide the supporting documentation for the same. However, management could not provide any supporting documentation to support the valuation. Management further explained that these are the assumptions which do not have supporting documentation. And without these assumptions, one cannot value the gemstones as there is no standard methodology to value them. Okay. So this is a particular case. Now, the first question, Mr. Akash was not sure how to verify the assumptions taken by the management. Kindly guide Mr. Akash with respect to obtaining an understanding of how management makes the accounting estimate, including the assumptions underlying the accounting estimate. So you need to guide Mr. Akash with respect to the verification of the accounting estimates. So I will just give you a minute again to read the question and then try to answer. So read the question, take a minute, and then try to answer. Focus on each and every detail. Trust me. Okay, so focus on each and every detail, whatever is there in the question, in the case scenario. Okay, and based on that, you need to answer. Now tell me, I hope you have read the question. So now tell me, what do you think? How Mr. Akash should obtain the understanding about the management's estimate? We have discussed this point multiple times. Come on, guys. How Mr. Akash should, verify these accounting estimates? Simple. If you have to write this answer in exam, how will you write it?
So reasonableness of the assumptions and the method that has been used by the management to arrive at such accounting estimates, whether they are reasonable, relevant and reliable or not, and the data source based on which management is taking their decision. As experts are giving them the valuation that is based on the fair market value, but the management is not using that expert valuation, then the management contention for doing so uh, could be reflecting a management biasness.
Okay. Yes.
Fraud risk factor could also involve in this situation.
Absolutely correct. Yes. What else? Apart from this, anything else do you think that should be looked into? Anyone? Apart from this, anything that you feel that should be looked into?
Management,
Yes. Management what?
the other participant can communicate his or her own idea.
Yes. Anyone else? No?
Sir, in this question, the data has been provided by the management expert and the ma-
Yes. Yes. So here the management has valued the stone. Expert has also valued the stone, but management has not adopted that valuation.
yes, sir. Uh, and the data provided by the management expert is slightly likely higher in the everything is on higher amount. Then and the management, when Mr. Akash requested management to provide the supporting documentation, the management is not able to provide the documentation also. And on that note also, the management can involved in the management can affect the objectivity of the management expert.
Yes, yes,
Uh,
yes, very good.
yes.
So correctly pointed out that in this particular scenario, basically, if you see now, Mr. Akash has to verify whether the valuation done by the management is appropriate or not. For that, number one, I need to understand the method assumption used by the management. And it is not something like that, okay, this is an assumption, so this will not have a supporting. No, no, it's not like that. It has to be a supporting. There has to be a supporting to each and every assumption, each and every methodology. Okay. Now, the second question comes is management that much capable enough? So here, this is a classic example of a specific valuation case. Okay. So when valuation of a rare gemstone comes into the place, it is the cup of everyone's cup of tea. I like not everyone can value a precious gemstone. Okay, it has a lot of things that on the basis of which they are valued: carat value, colors, size, quality, clarity. A lot of things are there. Now, even when these valuations are done, a detailed valuation report is prepared in actual. Now here, by just saying that okay, this will fetch this much amount is not accurate at all. There has to be a supporting background. Even the question can come is management capable enough? Do they have their in-house valuation expert to value this particular part? If yes, then again that I will treat that particular person who has valued as a management expert, in-house management expert. But if management doesn't have that particular person, then the capability and the competency goes on the toss. First of all, the capability competency goes for the toss. It is not at all reliable in then such a case scenario. Okay, so this is how Mr. Akash should evaluate. Now, if I have to write the answer in the exam, that is also very important. So we will understand that how to write the answer for this particular question in the exam. So to answer this question, first you need to start by quoting the relevant essay that is there. For example, here, as per essay 540, auditing accounting estimates, including fair value accounting estimates and related disclosures, when performing the risk assessment procedures and related activities to obtain an understanding of the entity and its environment, including internal controls, as required by SA 315, auditors shall obtain the understanding of how management makes accounting estimate, understanding of the data on which they are based, including the assumptions underlying accounting estimates, in order to provide a basis for identification of the assessment of a risk of material misstatement for accounting estimate. So first, general normal stage by stage audit, that first we'll do a risk assessment to understand what is the risk involved with respect to the accounting estimate. Okay, so starting with the risk assessment, we will gather the data. Then we will understand the assumptions, as assumptions are the integral component of accounting estimates. Matters that the auditor may consider in obtaining understanding of the assumptions of underlying accounting estimate include nature of assumption, including which of the assumptions are to be significant, management assessment whether the assumptions are relevant and complete, that all relevant variables have been taken into account by the management. Okay, and how management assess that basically. So let's say, for example, in case of evaluation of gemstone, how management ensures that they have considered the carat, they have considered the clarity, they have considered the origin, they have considered the size of the gemstone, they have considered the color of the gemstone, everything, all the variables. Where applicable, how management determines that the assumption used are internally consistent. Internally means whatever management is, let's say, operating. For example, here in this particular question, management is saying, no, black opal values at 2,500 per carat, $2,500 per carat. But when it comes to the sale in the subsequent year, management is selling at $1,500 per carat. So whether that is consistent with the internal data, okay, whether the assumptions relate to matter within the control of management. For example, assumptions about maintenance program that may affect the estimated asset useful life, and how they confirm the entity's business plan, external environment that are outside its control. Now, simple here is, let's say, for example, in this case, the particular gemstone, the rate of the gemstone is dependent upon the supply in the market. If the supply of a particular gemstone is high, the rate will slash. So that is an external factor sometimes. Or sometimes the lab grown diamonds are, if there's a change in the technology where you can just grow this gemstone in a laboratory with, advanced technology, which is much more cost effective and easily available, then again, the rate of the original gemstone will fall. So what are the conditions, what are the assumptions, or external environmental factors that may impact whether that has been considered or not? And then the nature and extent of the documentation for those supportings. Assumptions that may be made or identified by an expert to assist the management in making such estimates, and when that assumptions, when used by the management, they becomes management assumptions. So accordingly, they are required to be reviewed. Okay. Again, we need to have the relevance and the reliability of that particular external source of data that has been used by the management. So, for example, publish interest rate or statistical data, or internal sources sometimes are there, historical information or previous conditions or experience. So this is how you need to write the answer. Okay, by quoting the standard and then by providing the detail about how auditors should verify the accounting estimates specifically with respect to the assumptions taken by the management. So here it is there, how to verify the assumptions taken by the management. So first you explain the basic requirement of the standard, and then on the assumptions side. Clear with this? Any doubt how to write the answer for this particular question in exam? This is a suggestive way. Okay. to write the answer. Like you can have a different approach also, but this is something, where you should encompass the provision where you explain. So this is kind of one of a suggestive way. Any doubts? Yes, no?
No, sir.
Okay. Let's see one more question on the similar lines. When Mr. Akash inquired about a change in the methodology of estimating the value of gemstone, management responded the methodology of the estimate can be changed anytime, unlike accounting policies, and the same is permitted by Ind AS 8, that is accounting policies, change in accounting estimate and errors. Mr. Akash, being satisfied with the response, did not perform any further procedure on the change in methodology. Mr. Kush, the audit manager, asked Mr. Akash to relook on the evaluation, the change in the method for accounting estimates. Kindly guide Mr. Akash accordingly. Now, this question also brings into the Ind AS 8 into the picture, that change in the methodology. Now, management is saying change can be made anytime, perfectly fine. Mr. Akash is satisfied, but Mr. Kush, that is the audit manager, is not satisfied. Kindly guide Mr. Akash. You need to guide Mr. Akash by providing the appropriate way to evaluate this change. So, how this change should be evaluated? Come on, guys. Ind AS 8 plus your SFI 40, both together. First of all, tell me, is this a change in accounting policy or accounting estimate? Is this a change in accounting policy or accounting estimate? No? Okay. So, okay, let's tell me, if this was a change in accounting policy, how it should have been, accounted for. I know this is not the accounting or financial reporting one, but for the auditing part, it is necessary you understand what the applicable financial reporting framework requires. Till the time you are not clear with the requirement of applicable financial reporting framework, you will not be able to, comment whether that has been followed or not.
So the change in accounting policies, the retrospective effects are to be taken, and in case of an estimate, we take prospective effects.
Yes, yes, very good. So, in this particular example, do you think that Mr. Akash, that was satisfied with the response and did not perform any other further procedure, is appropriate?
No, sir. Mr. Akash should look into the circumstances and the reasons which gave this question for revising or changing the estimation for the valuation of the inventory. And whether it supports that stunt taken by the management or not, it should take about the reasonable steps.
Correct, yes. What else? What else he should check about change in methodology? Anyone? Okay, I'll tell you. See, first of all, it is required to be understood whether this is a change in accounting policy or a change in accounting estimate by understanding all the scenarios, all the available information in your hand. Okay, we need to follow India's 8, that is the guidance that has been provided in there to understand whether there's a change in accounting policy or estimate. I'll not go into the particular discussion of change in accounting policy or estimate. Let's suppose, whatever change it is there, accounting policy or estimate, we as an auditor, first of all, need to evaluate. Let's say if it is accounting estimate, how the auditor is satisfied with that particular change. See, the change can happen when there is a circumstance available, or when there is an external factor or internal factor, or when there is an change in the financial reporting framework. For example, tomorrow if there's a change that okay, inventory only NRV, no cost, so then you will change the valuation method of the inventory. So change in the method is needed when there is a change either in the external factors, applicable financial reporting framework, law, statute, something like that, or the change will result in the better reporting or in the better disclosure. For example, sometimes management change the valuation method of the warranty provision to reflect appropriately on the warranty provisions that they are required to make. Okay, so either change has to be based on some factors, or it has to be for the betterment of the reporting method. Okay, something more appropriate is there to report, or something more appropriate will be there if we adopt this method for the reporting. Now auditor has to evaluate whether this change is triggered by the factors or it is for the better reporting. Okay, if none of the thing is there, then why do you need a change? So that is something if auditor has to evaluate. Okay, that management has to demonstrate that the new method is more appropriate, either because of the external factor or better reporting requirement. Okay, and if that is not there, then the question can come on the change, why the change is required. And again, arbitrary changes in the accounting estimate will result in the inconsistent financial statements over the time. So let's say, for example, this year, hypothetical example, this year we did a bad debt provision on 10%. Next year we did on 20%. Then we reduced to 5%. Something like that. So these kind of arbitrary changes in the accounting estimate will result in the financial statement which is inconsistent. Okay, because what will happen is, today you have an inventory valued at something. Next year you will have an inventory valued more. Next year you will have an inventory valued less. So people will think, okay, when you will present the comparative or corresponding figures, people will think, okay, last year inventory was valued more, this time it is less. So they have sold more inventory. But that is not the case. It's just a change in the valuation method. So arbitrary changes should be avoided. And if there is an arbitrary change without any supporting, auditor has to inquire the rationale behind. If there is no rationale, auditor has to consider the impact on the financial statement, and accordingly, auditor has to opine on the financial statement. So this is how auditor has to deal with the changes in the methodology of estimates. Let's see the answer also, how to write the answer for this particular question. See, when you are writing the answer, you may quote the relevant applicable financial reporting framework, that is in the case is Ind AS. Then you need to quote the relevant essay, okay, which is there. Like, what is the responsibility of the auditor to perform risk assessment, to perform understanding of the methods, okay, to provide the basis for identification and assessment of a risk of material misstatement. Then how auditor has to evaluate the changes in the accounting estimates. What is the requirement based on of SA 540? Again, specific estimation method, like, either it is changed because of the environmental circumstances, like the factors, or it is for the better reporting, more appropriate reporting as per the financial reporting framework or fair presentation framework. So you need to understand the reason behind the change. Then again, if the change is arbitrary, then it may impact the financial statement. Like then you provide about the current scenario, and then you comment that Mr. Akash should first understand whether there is a change in the nature of accounting policy or change in accounting estimate. Secondly, the need for the change that is required to be understood. And thirdly, Mr. Akash should understand the requirement of the financial reporting framework with respect to such changes and accordingly should perform the subsequent audit procedures. So this is how you need to answer the question. Provision, explanation of the provision, current scenario, which is given over here. This is current scenario. This whole part is your provision, which is applicable over in this particular case. Okay. Then you need to conclude with the conclusion that is there by combining the provision and the current scenario. Clear? Any doubt?
So,
Yes.
in present situation also, the question is constantly asking about us the estimation, and our answer is just around 540, say 540.
Yes.
And we are not stating anywhere about SF 501. So whether it would be correct on our part to extend the answer, since the in question inventory is of a valuable nature and it is also material, so can we give an answer additionally that he should also check onto the existence and the condition of the inventory?
Now here we are again, so we are not talking about the existence and conditions. So if the question talks about the existence and conditions, you may answer in that way. But here, what is asked specifically, like changes, Mr. Akash, to relook on the changes in the method of accounting estimates. Now, if the question is specific, if you write something additional which is not relevant in the scenario, it will not add up to your answer. See, the question is asking a specific on the accounting estimate. However, if I write about existence and condition, okay, so that is something different. This is something related to the valuation part. Valuation assertion I'm talking about. But when I talk about existence and condition, I'm talking about some other assertion. As a result, you need to be specific in your answer rather than adding more and more things. The reason because when you will write answers in your exam, you will have a limited set of time for each and every answer. In that set of time, you have to be specific and precise what you want to communicate to the reader of the answer. Okay, that with respect to this question, this is my answer in a precise way, in a appropriate way. If you will add more details which are not relevant to the answer, then what it may happen is, first it will disturb the flow of the answer. Number two, you might dilute your conclusion. It may happen that when you are concluding, that you conclude on SF 501 instead of SF 540. Thirdly, it will take more time, and we have to be time bound when we are writing the answers. So that's why I would not suggest to include SF 501 in this answer.
Okay, sir.
Any further doubts? Any further questions?
Sir, not related to the subject, but I just want to please request to the Board of Studies to update the timetable, as after today's class, there is no class of yours in the schedule.
I will make sure the timetable is updated. Don't worry on that. So it will be updated as soon as possible for the month of December. So don't worry on that part. It will be updated.
यस सर, क्योंकि फिर यानी वो दिखाई देता है ना कि लेक्चर नहीं है, तो हम लोग को पता ही नहीं चलता कि लेक्चर है या नहीं है.
Sure, definitely.
Thank you, sir.
I'll get it updated as soon as possible. Any other doubts, guys? Any other questions? On any of the thing that we have discussed till now? Any questions? See, I feel that you might think that, okay, the answers that you are speaking and the way it is written is a bit different. Okay. It may happen that you are able to speak the answers, you are able to give the answers, but when it comes to the writing, you are not that much fluent as you are seeing on the screen or in the other materials. That comes with the practice. Trust me, it will come, but it will come with the practice. So you have to keep writing, keep the writing practice intact. You have to keep write the answers. You have to keep practicing the questions. The more you will practice, the more you will, gain the skill of writing an answer. Okay. And the more you will be able to, understand that, okay, how we need to answer this particular question. What are the things we need to take care? Because when we are answering question, there are lot many things that we can write, but see, at the end we have a limited set of time, and there is a specific thing which might be asked in the exam. So considering both of the things, you have to be precise within the given time frame, and that is something you need to learn also while writing the answers for the question. That, okay, how to write precise answers for the given question within the given time frame, and that will come with the practice. Trust me, the more you will practice, the more you will get those things. uh, any doubts, any doubt till now? So this was our chapter number 6 plus a lot of questions that we discussed. Okay, I would request everyone to please go through the study material of chapter number 5, 6, whatever we have discussed till now. After this lecture, I will upload these questions on the portal also, so that you can refer back to these questions and you can practice again. Okay, but please do read, do practice, and ask as much you doubts as you can. Okay. If no further doubts, then I propose to end the session till here. In the next session, we will start with a new chapter. The schedule will be uploaded in some time. So please keep a track on the schedule. What is the next chapter there? So be prepared with that next chapter. Mostly it will be chapter number 7 that we will be starting after 6. Okay, on the reporting part. Plus that chapter is very, very crucial. Very crucial. Trust me. Chapter number 7 is a very crucial chapter because it talks about reporting requirements, audit report, SA700 series. So please make sure you read that chapter in detail and you are prepared with the doubts. Okay. If no further questions, then thank you guys. Thank you for participating in today's session. I'll see you in the next session. Yes. Thank you. Good night.